As you know, they've agreed to send 8 boats 2 days ago, and then they added another 2, so it was 10 boats, but they gave us, I think out of a sign of respect, 20 boats of oil, big boats of oil, going through the Hormuz Strait. And that's taking place starting tomorrow morning.
President Trump saying the U.S. is in serious discussions with what he calls a more reasonable Iran, but still making it clear, if a deal doesn't happen, the next stage won't be negotiations. It will be devastation. Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dagan McDowell, Brian Bremberg, and with us for the hour, Rosecliff founder and managing partner Mike Murphy. The president's demands come as U.S. forces move into position, and new reports suggest that the White House is actively weighing a military operation to physically extract or destroy Iran's enriched uranium stockpile. It's a sign that this could shift from the air to something potentially bigger. Meanwhile, Iran isn't backing down, threatening retaliation, expanding the conflict through proxy groups, even warning of new targets across the region. And right in the middle of all of it, the global economy. The market can't decide whether to price a deal in or price in a catastrophe. So it's doing a little bit of both. Oil prices, though, climbing again. Markets edging higher on hope, but one headline away from reversing because the clock for a peaceful resolution is ticking. And while the U.S. is insulated, it's not immune.
We are not going to feel it as much as Asia and our European allies are going to feel it because of American production, of course. But this is a crisis for Europe and for Asia right now. But the only real solution, it has nothing to do with tariffs, the only real solution is to get the Strait opened.
Okay.
And if we can do that this week with targeted regime actions, I think we have to take that opportunity because it's only going to get worse over time.
Okay, and we're going to watch this all play out this week, but we're looking at a market, Mike, that is trading higher in terms of stocks. There's some appetite to put risk on the table, but oil prices also climbing on this perceived escalation. The fact that the president is weighing options, but also the troops are moving over in that direction, you think to yourself, he's having these conversations, he says he's optimistic, but there are alternate plans in place if they're not successful.
For sure. And I think one of the reasons the market's moving up today is the messaging coming from President Trump. So here it is. We're negotiating. It's going well. If not, we're going to do this. So we have the date. We know the action that's going to take place. So that would, if we're forced to carry out those actions, blowing up the energy infrastructure in Iran, oil's going to go much higher, and it's going to be a short-term hit to the markets. However, if we get a deal, oil's coming a lot lower and buying's going to come back into the market. So I think right now people are liking the messaging coming from President Trump. That's why they're willing to take some risk to go in and buy some of the market here, equities across the board. And it feels to me like right now the glass is half full, that people are believing the messaging. They're believing that there's some sort of deal out there to be had. But again, it's a short trading week. Markets are closed on Friday, so let's hope we get a deal before then because no one's going to want to be long into a long weekend.
Okay, and crude oil, West Texas, is trading at $103 a barrel and change. That is way past my uh-oh mark, Brian. I don't like it.
Are you still uh-ohing at 103?
Yeah.
Really?
Once it crosses 100 and stays there,
okay.
I'm not really happy about that. But I'm wondering if you think that the market is getting this right, because I look at Trump's negotiating style in the past, and I also look at the people he's supposedly negotiating with, and I really have to question whether these talks can lead us somewhere positive.
I don't know. He's forcing the issue, okay? I think oil's creeping up a little bit because clearly he's forcing the issue. He is focused on the Strait of Hormuz. He wants it open. And he's saying, if you don't open it, it's going to get nasty, okay? And that may include ground troops. That could include energy infrastructure. Carg Island could get hit hard. But, you know, what have we been saying for weeks? We wanted the president to get focused on the Strait of Hormuz. We wanted to deal with this issue. And Israel and the United States have been taking out military assets and production facilities and moving in. And he says, we're now there. Open this up or I'm going to unleash fury. It's called epic fury. I'm going to unleash fury. And markets are saying, well, that could go bad. Right? That's why I think prices are going up, because they're saying if it's not executed well, it could go bad. But if it's executed well, or if it's not executed at all, because the leverage of the threat brings whoever these people are. Jackie, I have no idea who these people are. I don't think you can trust anyone in that regime, but I don't know who he's talking to. And if the leverage of the threat brings these people to the table, maybe you get a deal. And we just have to see, right? But markets don't know that, and they know it could get messy, and I think that risk is priced into oil right now.
But if whoever's in charge or leading right now, which is, I mean, we're not really 100% sure because so many top leaders have been taken out and the regime definitely has been weakened. But provided these talks, are at least constructive, there are going to be certain things, Dagan, that the president asked them to do that part of me says there's no way they will do, because those are the things that have kept them in power so long. And that's what they're worried about, their power.
Right, and the regime representatives, whomever they may be, have come out and indirectly rebuffed some of what has been said publicly by the United States. The problem trying to invest into this is, do you take anyone at their word? President Trump came out this morning on Truth Social talking about attacking potentially power stations, oil wells, Carr Island, at the possibly all the desalination water plants was also mentioned. That would be a war crime under international humanitarian law, according to the additional protocols from '77 to the Geneva Convention. So do you invest into that? To what extent? It's just a big question. I will, for the benefit of Asia and the benefit of Iran in terms of how much money Iran has still been able to make through oil exports. Just this morning, Tehran was loading 5 oil tankers at the same time. Well, that was yesterday at Carr Island. So, and this is also wildly enriching Russia, which is providing not just intelligence to Iran, but is able to, at the moment, sell its oil on the market with a waiver from the United States at a much higher price. How do you invest into that? I could go on in terms of what there was an article that I read over the weekend that PEMCO and JP Morgan are saying the bond market is misjudging the slowdown risk, in essence, meaning that the U.S. economy, world economy is heading toward a slowdown. Yes, I do think that there is a global slowdown from the energy shock that Asia and other parts of the world are experiencing. But do you buy treasuries here? Not after the screw job, the smoke show, the shellacking that Treasury investors got during COVID from the Fed keeping short-term interest rates low, from the trillions of dollars in money that the Federal Reserve pumped into the system, and the checks that the U.S. government sent out, in essence, with borrowed money. People are still licking their wounds from the almost 40% losses in longer-term treasuries they experienced over 5 years. So, no, pay me a lot higher interest rate if you want me to loan you money, Uncle Sam. And that's kind of what we're staring at here.
Yeah, and we're putting, let's see, that's the 2-year. It's almost close to 4%. The 10-year was slightly lower today, 4.338. I don't know if that's a worry spot for you, Taylor.
So, you know what's interesting? There's a few things, and, I don't know if Dagan will agree or not, but I'll throw some things out there about what I'm reading. Yields are falling today. Jay Powell was speaking, and he said the Fed doesn't have tools effectively for a supply shock. What's interesting is we talked last week that this isn't a supply shock, it's a price shock. Anyway, so I think markets are trying to figure out what he means by that. Maybe the Fed can intervene, right? If this is sort of a one-time price bump, then that hike, and I don't think that there will be a hike, right? That doesn't materialize, and that's sort of good news. I think what's also interesting is foreigners own about 30% of marketed treasuries. So there were some comments last week that if you have to raise money and you're a foreigner, you were trying to sell treasuries, you sell what you can to raise money. There was a report that Turkey liquidated its gold to buy its currency, to prop up its currency. So I don't want to say that what's going on in the Treasury market isn't real. But I think people are selling because they can raise money to buy other things. You sell what you can in a down market. So I thought that was interesting. I think the good news from the equity side, and I come today with some positive news, is let's think we're down maybe about 10% in stock markets. We're up today, but from recent highs, it's been a drawdown, but it's only been a month. And we remember that V shape during 2020, that as fast as you go down, as fast as you can recover. So that could be a bright spot when thinking about how to invest in this market. Valuations haven't been this attractive in 6 months. So I think some people are thinking, is this a good time? I've been waiting for this moment. I've been waiting 6 months. Maybe this is the moment. So that could be another interesting. And then in terms of sentiment, the fear greed index is down to 10. The low in COVID was a 3. So you're getting like very, very fearful. And usually if that's a contrarian indicator, that's when a lot of people think it's a good time to buy, when it gets like an oversold market. So that's sort of a hodgepodge of data points. But overall, the notes I've been reading actually felt more constructive this morning. That being said, a lot of people are thinking like, you're right, when we're just trading on every single headline, and I don't know tomorrow if we escalate or de-escalate, that can be very tricky unless you're really in it for the long term.
So if it's all headlines, like trading on headlines, we talk about this all the time, it seems like a loser's game. How in the world are you going to figure that out? Aren't you just making a bet like either the world's going to get safer and more prosperous sometime or it's not, right? And if it is, you're buying into the opportunity. And if it's not, maybe you're sitting on the sidelines or selling.
And I hear you about that in terms of a longer term play, but I also look at this blip, which can't be ignored, that's happening right now. And I wonder if investors look at their portfolio and they're feeling down 10%, Mike, if that creates a little bit of a pullback. Because my unofficial meter is, can I get into good restaurants last minute here in New York City? And you know what? All weekend I could, and the restaurants were packed. And I'm wondering to myself, you know, you're not traveling with the TSA lines. I can't worry about, can't think it's that people are all over the place. But I do think that, you know, there has been a wealth effect as a result of this stock market and some of the other asset classes. And all of a sudden, you might see people pull back, and that has ripple effects on the economy.
For sure, it could happen, but this 10% pullback, I think, more to the larger, almost 20% pullback we saw in tariffs last year. I think people are ready to put money to work because remember, the big investors, they get money from people and they have to put it to work.
Sure.
So they can't sit indefinitely and wait for a better time. So down 10%, great time to put some money to work. And also midterms, you know, the midterm year since 1950, there's a drawdown in this year that we're in. And the average drawdown in midterm years since 1950 is about 15%. And if you buy the drawdown like we're in right now, that trade has been profitable 1 year later every single time. So right now, yes, we need to get past what's going on in Iran, and those headlines are going to move the markets. But I think the valuations that we have right now and people, the amount of money that will need to get put to work, I think down 10% is a great opportunity.
Okay, and I also like that historical perspective.